This is Justice. I wanted to share this information before we begin our episode. This is a message from registered representative and investment advisor representative of the securities offered through One America Securities Incorporated, a registered investment advisor, member FINRA and SIPC. Moody Street is not an affiliate of One America Securities and is not a broker-dealer or registered investment advisor. Welcome to the Growth Matters Podcast. My name is Justice. The Growth Matters Podcast covers many elements, such as how we can grow in our faith, family, finances, and friendships. Today, we're going to focus a little bit on the family with this episode. We're talking about the benefits of life insurance, and we have a subject matter expert in the studio. We have Thomas Stevens, a financial services executive with 20 years of experience in financial field. He is licensed and certified Series 7, 24, 63, and 65. He holds an MBA from MIT Sloan School of Management and has been a board member of various organizations. Welcome to the Growth Matters Podcast.
Thank you.
Yeah, we're glad to have you here today. If you would, you share a little bit with our audience, a listening audience, about yourself.
Oh, sure. I've been in the financial services industry for a bit more than 20 years now, and started in the Boston area and just grew from there, and had lots of different roles on the insurance side, from product to sales and marketing, and certainly in the corporate environment as well. And so I continue to do that to build this awareness and education around finances and financial services.
Great. Well, to start this conversation off, we want people to really focus in on this essential topic, the benefits of life insurance, and to get their juices flowing. One of the questions is, why is life insurance needed?
Well, for me and for many people, life insurance is one of the most underappreciated assets that one can have, because it provides beneficiaries with tax-free income or stream of payments to be able to maintain a standard of living, and certainly to pay debts, education funds, pay off the mortgage, or other expenses that are related to the loss of a loved one. But it's not only used for those purposes; it can then be also used as a source of income while you're living. And it has, as I said, it's one of the most underutilized tax leveraged products that we have, in the suite of wealth planning products in this industry.
Oh, okay. Please explain the difference between the types of life insurance. I think there's a term life, whole life, permanent, or burial,
Sure.
Something like that.
Sure. Term life is usually for a fixed period of term. So it's a 10-year or 20-year or some fixed period like that, where if something were to happen to an individual, it pays a benefit. The other type, more broadly, is what they call permanent insurance, which includes cash value buildup. So this is the vehicle that has a bit more leveraged ability to have cash value buildup, investment options, and can pay a stream of income in a variety of different ways. So that's it's usually, for most people, a better outcome to have permanent insurance than it is term insurance.
Okay. So how do you determine what amount of insurance would you need?
One of the easiest ways for a family to think about this is to think about the things that you would want to accomplish if you didn't have the other provider in the home to do that. So whether it's education funding, or whether it's providing income for a loved one, whether it's paying off the house, as I said earlier, you want to kind of think about that in broad terms to be able to provide that income to do that. So, for example, college is one of the outside of a home purchase might be a fairly major investment for a family, and so when you think about the costs for a college education today, those can be quite pricey, right? So you think about that in the stream of 4 to 6 years, or that not just for the 4 years of college, but you might be needing funding leading up until college, high school and beyond, depending upon where you live and what types of schools that your loved ones are going to attend.
Okay. And dealing with that coverage, I mean, can you start at a certain amount and maybe increase it as time goes on? So, there's not a lapse in coverage. I mean, if there's a lapse in coverage, what happens then?
Well, you think about this as a gap in coverage, not necessarily
Okay.
a lapse in coverage. So a gap in coverage would be, I have a home that is particularly in this area in the Northeast, homes are a little bit expensive, right? So if you're looking at it from the standpoint of a home purchase, your home purchase may be, let's just say it's $400,000. But over time, that value increases, right? So you might have a gap in coverage based on where you started. And so in those cases, you might want to have explore an option of having additional coverage,
Okay.
right? That would cover those gaps, right? So you purchased your home, you didn't have children, for example. Your home was 400,000. 10 years later, now you've got 2 kids, right? So your needs change as life changes, right?
Yeah.
So as your life evolves, the different periods of your life, you want your insurance coverages to adjust with it. So that means that usually you might get a second policy or an additional policy, or you might upgrade the existing policy that you have
Okay.
to cover those gaps in coverage.
Okay. That's good. So have you considered what would happen to your family if you could not support them? I guess the question to pose that people would think about. Or another way to put it is, what would it look like if you did not have life insurance coverage to your family?
Yeah, that is really the heart of the discussion, right? So, what would happen if a mother or father or loved one were not here to provide for their family? Many homes might be a single income, maybe they're dual incomes, or maybe they have a multi-generational household where there are multiple sources of income to cover the couple of family needs. And in that case, so you think about that, and if I'll just make an example, if Dad were not here to provide for his family, or Mom were not here, and they, let's again give an example. They have $100,000 income. Right, and if that income were no longer present because they passed away perhaps prematurely, then what does that do for a family, right? And so for a family, right, when you're thinking about those things, that could mean that they need to adjust their standard of living. Maybe that means that they are no longer able to live in their home. Maybe it means that the children or the loved one have to adjust their school situation, right? So there's a whole domino effect that can occur when a family, kind of can be left with being underinsured, right, from where they need to be. And so what we try to do is, and I know this is sometimes a difficult conversation for families to have, but it is a realistic one that they need to have, to say, hey, if something were to happen, what do we really want to do? And let's put it in real terms that are clear and that are easy to understand and based on a family's goals, wishes, and desires they want for their family, right? And so it might be that there is a family that is, in this day and age, you have the sandwich generation, for example. Now, the sandwich generation is of a family that is caring not only for children, but they're also caring for elder parents.
Yeah.
Right?
Okay.
And so the sandwich generation is a real thing that what would happen, now back to your question, what would happen if I'm not able to provide for my family? Now perhaps I am providing elder care, nursing for my parents, or perhaps, there are children involved as well. So now on both sides, right? This is going to impact a family. And so by having these discussions with your family and candid conversations, you can arrive at a really good place about the coverage needs. But more importantly, you can begin to think long term about thinking about this in stages. Okay, so right now we can do X, right?
Yeah. Okay.
And then in the future, we might want to your earlier comment, we might want to consider additional coverage when our needs change, or maybe we've got we've been promoted at work, or we've got another job opportunity, and now all of a sudden we need additional coverage to cover those needs, right? So the key here is to start, right? That's the key, just to start. Better to start and make a decision to purchase additional life insurance later than to not start and be caught underinsured, where you really have those troubling situations occur.
Yeah, because when you talked about what the goals, because you want to, I guess, kind of make it like a little roadmap. For instance, what's the standard of living that you have today? How you want to have? Do you want to keep that standard of living in the future in case this loved one's not there to provide the income? Absolutely.
It's thinking about the standard of living, but also thinking about what's realistic in the family finances, right?
Yeah.
And so starting at point A is terrific, right? Because you don't necessarily, a family may not be able to get all of the coverage that they need, but they can start somewhere. And so by starting at a point today, that means that it gives them a target to shoot for down the road. It may be some years down the road, or whatever time point it is in the future. And that way, at least you have some basic needs covered, and then you can continue to grow from there. I mean, that's part of the financial planning process when you really think about it holistically, which says that we really want to think more broadly around our retirement needs, our insurance needs, our education needs, and other sort of things that go into the spectrum of planning, and that's what this is really all about in general.
Yeah, because really, when you said it like that, it seems like life insurance is an umbrella to effect.
It can be, absolutely. The life insurance can be sort of your foundation, if you will, in terms of a family's financial planning goals, or their financial pyramid, as they say. And then you build from there, right? And so you revisit these things as you would, consider it like a financial doctor, right? As you do your annual checkup, right? You should also review your financial goals and needs, periodically throughout your journey, so that they are up to date. If there are any adjustments that need to be made, you can certainly do that. And most times, what often happens is there's a new goal that comes up, right? That we're families. Oh yeah, I was thinking about retiring, by some date in the future, and I don't have enough plan there, or I'm thinking about how do I use kind of these vehicles that I have to bridge the gap for any other planning needs, whether it be education, as we talked about earlier, retirement, and or just in general foundational needs like insurance.
Oh, great. So, what are some of the health questions that a life insurance person would ask?
Yeah, well, one of the things, that's a great question. And one of the things that comes up often is people are, really concerned about their current health conditions. And so with the advent of technology today in the underwriting process, it's a little bit easier to kind of think about these things like life insurance, because things like medications, your general health and wellness, any conditions that someone might be dealing with, height, weight, those kinds of things are generally most people would be eligible, for life insurance because of the medical advances that have happened in society today. And so many people are managing those health conditions with medications, with regular doctor's visits. And so those things are generally not frowned upon, because most people are dealing with them in some way or form.
Now, if you're a smoker versus a non-smoker, does that have any difference in the price or cost, maybe?
Yeah, sure. So, I think in general, to answer your question, in general, you have your health conditions, which always will sort of play a factor in the pricing of your insurance, as well as whether someone is a smoker or non-smoker. But most people today, I've found, are conscious of their health conditions and are trying to mitigate them by way of diet and exercise. People today are really thinking about their longevity a lot more than they have in the past because of the advances in the medical industry. And so, many people are aware that smoking, for example, may be detrimental to the health, and so they're either cutting back or reducing their intake, and thinking about how to, again, back to technology, thinking about how they can reduce or eliminate those things, either through medical patches or other things that they have available. And so, while that I think the gist of what I'm trying to say is your overall health here is the kind of the key thing here, right? And so if someone has, I'll make it up, high blood pressure, but they're managing it with medication, and they're also, for example, they're a walker, so they like to walk every morning. So all those things are considered in the underwriting process, and I think today, as I said, many people have the many people are sort of intimidated by the underwriting process, but because of the advances in health and underwriting in general, that those things are usually minimized with the appropriate action that someone can take to either minimize or prevent it.
Oh, good. One other thing I was just thinking as you were explaining that, because I think there's a point where people, like young people coming out, graduate from college, get their first job or what have you. Would you suggest that they would maybe purchase life insurance early on, because it might be if, say, for instance, let's say whole life or permanent insurance, if they start to get it at 25, and they probably can keep it at that same rate for the rest of their lives, as long as does that make sense?
Sure. It's really interesting with the different generations, how attitudes sort of shift.
Okay.
Right. And so in my case, having worked with a lot of younger people, their attitudes towards retirement aren't necessarily the same as our parents' generation, right? And so many people, particularly young people, feel that they have to do more to save for retirement, for example. And so things like we talked about earlier, cash value life insurance may be a vehicle that would support that. Also, younger people are thinking a little bit further in advance in terms of their own sort of family journey. Okay. And so while many are delaying the idea of having children, it doesn't mean that they've eliminated that possibility for the future, right? And so for a young person who's thinking about having a family and thinking about kind of the idea of life insurance as a wealth accumulation vehicle, the key thing for them now, as your earlier point made, is that not only can you lock in sort of the best rates, but also at a younger age, your health is much better now, likely to be much better now than it is later. And so when you can have the ability to kind of lock in great rates now, because you're a young person, it gives you the greater leverage later on down the road to accumulate all these things that we just talked about, cash value. And at that point, you can decide if when you're, say, 40, if you have kids, what do you want to do, or if you have if you're really focusing on retirement, you can kind of really leverage this as the idea of supplementing my retirement income if you're concerned that either Social Security or the 401k or other pensions or other retirement plans won't be enough, right?
Okay. Oh, that's good. Thank you. Are there any obstacles, limitations that may prevent someone from getting life insurance?
I think that's a really great question. I think the biggest obstacle that people have is around education, right? Having that ability to have a conversation with a professional who can not just answer your questions, but allow the individual to feel comfortable and confident about asking, questions, that they may feel intimidated to ask.
Okay.
Right. And so, it's the idea of, well, I don't want to ask a dumb question, right? So what, and I would argue that there are no dumb questions in this process, right? And so what you want to create a safe space for people to really just be able to ask questions, feel comfortable, and I think the other point to this is also that I think regardless of what your background is, people want to feel heard, and they want to feel understood in terms of whether it's a cultural or language barrier or cultural barrier or whatever it is. They want to understand, and they want to feel confident that people really understand where they're coming from in terms of their goals or values or what it is they're trying to accomplish.
Mm-hmm. Oh, great. Do you want to share anything else as we conclude this episode on today?
Well, one of the things that you think about when you thinking about life insurance is, well, people say, I don't want to think about life insurance because I'm going to live to be Jiminy Cricket, right? I'm going to work for a long time. I'm going to be healthy, right? And sort of thinking about it in the terms of a crystal ball. Right?
Okay, all right.
Well, let's kind of flip that on its end for a second.
All right.
And say, well, the question for families might be, I'm not concerned about the discussion of life insurance. Okay, I understand. And so because you feel I'm young, going to work a long time, I'm going to, be healthy. I'm healthy now. Okay, great. What if you get sick or injured and aren't able to work? Then what happens? Right? So it's a different discussion then, right?
Yes,
because
that's right.
It's a really different discussion because now you have people who might have a stroke or and they can't work, or maybe they got injured on a job, or maybe they are think about the case of, folks who work in as first responders or civil servants. Maybe they're a firefighter, right? In my case, I have a member of my family was a firefighter and was disabled and could not return to the job, right? And so when you have those situations where people are living but unable to work in the same profession that they had done so previously, then it's not a question of whether they are living too long. The question is, how do I replace that income, right?
Okay.
And so we can save that for another day if you
All
like.
right.
But those are questions that everyone needs to ask around this question of insurance in general, which is life insurance is a great accumulation tool, picking the right one for you that would suit your kind of your family needs and get you started. And then the other discussion is, well, what happens if that is one issue, but the other issue is what happens if I get ill and unable to work, and then how can we kind of position this so that my family is still able to maintain their standard of living through other types of insurance as well. So,
yeah. All right. Well, we thank you so much. How can people contact you to speak further about obtaining life insurance?
Sure. I appreciate that question, Justice. And certainly one of the ways that folks can reach me is by email. And my email would be tstevens, TSTEPHENS, at moodystreet.com. tstevens, TSTEPHENS, at Moody Street, MOODY, Street, STREET.com is my email. Or you can certainly reach me at 617-916-5155. 617-916-5155. And I'm happy to answer any questions from people here certainly the United States, but certainly regardless of where you are in the which part of the country you live in, I can certainly answer your questions and get you on track.
All right. Well, thank you. Again, thank you, Thomas Stevens, for being our guest on Growth Matters podcast and sharing the benefits of having life insurance and the types of life insurance. But I want to leave our listening audience with something to chew on and lock in on this essential topic. That is a Pinner's image. If you died today and I attended your funeral, which of the following would your family find more valuable? A $20 donated to your GoFundMe. B, $50 in a sympathy card. C, a dish of food. D, a flower arrangement. E, a check that covers the cost of the funeral, the remaining medical bills, all outstanding debt, pay off the house, and replace lost income. If the answer is E, please make the decision to purchase life insurance if you do not have a policy. Life insurance is the family income after the salary dies. When you have life insurance, you know that you give yourself and your loved ones complete peace of mind. Thank you for listening to Growth Matters Podcast. You know what to do. Like, comment, subscribe, and share it with the broader community. Until the next time, stay focused, prepare, execute, and celebrate the victories as you continue to grow and develop in every area of your life. I'll see you at the next episode. Peace. I am your host, Justice.